Hey traders. Oh, I forgot my screen. Welcome to Charts and Coffee. Hope everyone's having a great morning. Happy Tuesday, everybody. We are getting ready to start up our morning trades. We're going to be focusing on some day trading in the Sector Secrets Mastery and the Simpler Futures room here about 10 minutes before the bell. But before we get started, what is that? What is the preparation? What is that pregame we're looking at? And caffeinate and dominate time. Where is my caffeine? One of my favorite mugs given to me by a member, by a student. Love this thing. All right. So hope everyone's got their well, first of all, time frames sorted out. Let's talk about time frames before we take any questions. Of course, if you have any, type them on in. What is it that we're going to be focusing on the first hour or so? Of course, we're open to day trading all day, but the first hour for me has been the most productive throughout my career, and that's the 5-minute time frame. Now, if we flip that, just kind of the opposite end on this layout of time frames that I look at, the next most common time frame for me is the daily, and we have a couple trades open right now on the daily time frame, which we'll talk about when I get into the room. We have a couple things to keep an eye on. Number one, we have a long JP Morgan position on, and that's really taking advantage of sort of this rally into earnings that we've seen in financials, as well as just a general amazing uptrend bouncing along the daily price movement ranges that we've seen on JPM. The other one, very different. We go from financials to hamburgers. And here we have McDonald's. McDonald's had an amazing day yesterday. We have the 285 calls for Jan 19, which means that if we can continue to see higher highs out of McDonald's, we've already hit a T1. So we moved to break even. So we're going to be managing these two positions as we start our Tuesday trading session. Now, that doesn't take away from the day trading that I like to do, right? That does not in any way take away from that. And the idea is that if I have multiple time frames that I'm watching, I have multiple time horizons. You know, what's happening today versus what's happening over the next few weeks, over what could be happening over the next few months, right? So think about that as you're aligning yourself to your trading day. All right, that being said, let's take a look at what we've got going on in the broader averages. And let's see, Will R asks, are buying this dip, considering chips getting solid today, are buying? Oh, semiconductors? Sure, we can take a look. If I'm looking at semiconductors, I'd like to see the NASDAQ. I'd like to see the NASDAQ continue higher, which it's not. Now, could semis be a relative outperformer? I'm not going to presume that they're going to be. But as far as buying the dip in semiconductors, look, buying the dip in semiconductors after a big move higher, that's momentum trading, not how I play. What I want to remember is, as a market's launching from one end of a daily price movement range to another, at the gold zone, I'm not buying here. That's not even a dip, right? What that is a lot of bullish momentum, but that doesn't mean it's going to continue. In fact, it's not. We're trading at 170. We're almost $1.30 lower than where we were yesterday. So the idea here is, when can price get back down to that gray zone? I mean, look how well the gray zone has done holding as support when we are moving from one end of the range to the other, looking for overall strength. I'll tell you this, though. I think the biggest thing is, why semis, right? And why would I focus on SMH, or which stock within the semis, in fairness, would I focus on the SMH? I'd be far more interested in names like AMD off combinations of the 34 EMA wave and the daily price movement range. I'd probably also be a little bit more interested in Intel. So what I'm looking at is what stocks within the SMH are still in uptrends, as opposed to just buying the SMH, which I have no problem with, but it's getting quite wobbly in terms of the structure. And you might be saying, okay, Rog, what structure? I'm talking about these two rows of colors at the bottom of my chart. And ultimately, if they stay green, buy the dip, if those two rows, the trend is the lower row, the momentum is the upper row. If those two stay green, buy the dip has a far better probability of bouncing after a retracement. And by the way, gang, that's exactly what the logic of JP Morgan and the logic of the McDonald's swings and wins are. All right. And that's what I want to keep in mind when I'm looking at trades like this. Prioritizing trends means prioritizing the green structure. And if I can, far better follow through. All right. So moving on. Let's see what else. Let's go take a look at the S&P since I was talking about financials. Let's go take a look at the S&P. And that is clearly still in an uptrend. Again, very strong session yesterday. Pullback happening a little early today. Remember, this is pre-market, gang. And pre-market is not necessarily indicative of what we're going to see through the clearing, nor what we're going to see after, say, 10:05 a.m. Eastern. I do want to be a buy the dip player on the 5-minute time frame. However, take a look at the structure. Take a look at the very bottom of my chart. And what you'll see there is a red lower. Actually, let me grab my drawing tools here. Just bear with me. All right. So what we're focusing on here is this red, there we go, structure right there. And that means on this 5-minute time frame, at least on a very short-term time horizon, I'll be focusing bearishly. But if we continue to move lower, look, this is why I don't use multiple time frame confirmation, gang. Each time frame has its own support, its own resistance, its own structure, right? Its own setups and its own patterns. To say that I need the 5-minute to agree with the daily or the daily to agree with the 5, that cascading of time frame simply does not work at scale. And we're all taught it, yet we all have a hard time letting it go. This is the problem with the dogma in trading. On a 5-minute, I don't mind to be a short seller if indeed I can get the setup, which would be a short the rip, by the way. But if that short the rip continues lower and we get enough weakness that leads us into the daily price movement range zone, fantastic. Then I'll buy it, right? So remember, if we can separate, even compartmentalize our day trading from our swing trading, if we can compartmentalize our 5-minute structure and setups from our daily or whatever time frame you like, we're going to do so much better than expecting all of these to sort of sync up like rockets, right? And by the way, by the time that happens, probably the best of the trade is probably over, right? You've already gotten a lot of the movement. Okay, so let's jump into. Oh yeah, I did want to remind you all, by the way, if you're looking at DPMRs, if you're looking at HPMRs, we still have the sale going on until this Friday. So there was an email that went out, I think also in Simpler Insights. If you want some examples of how the daily price movement ranges are working, check out countdowntrader.com. Just type countdowntrader.com on your browser and you'll see some examples of daily price movement ranges at work in this environment. All right. So let's see. Christian says, I understand usually you wait for a volatility event, FOMC, PCE, and wait for that yesterday, Christian. I just want to be cognizant of that. So if, for example, taking a short-term swing in JP Morgan, taking a short-term swing means I'm cognizant of a certain time horizon, but that's just an additional. I don't always wait, but it is one type of opportunity. So we did 2 winners yesterday without that. Is there a time when you think the news was so important that it could change a trend and not take the trade? No, I do not believe news will change a trend. News can break a trend. News cannot make a trend unless it's Powell, and it won't happen in one session. And news, really, the issue with news is volatility. The issue with news is not whether or not the trend will break or whether it will be changed or reversed. The challenge in news is simply, is the volatility that it could trigger going to be something that we can hang on to? Is the travel and the price action within risk parameters? And that's the most challenging thing. Yeah, that news presents. All right. Let's see. You're most welcome, Christian. My pleasure. 305 says, please go over the bond yields and the NASDAQ lack of correlation. Sure. Just pull up, first of all, gang, at any time, just pull up the two charts, right? So let's pull up NQ first. We'll look at the entire year, right? Let's look at all of 2023. This is one of those things that I actually scratch my head. I'm glad you asked. I scratch my head every time someone talks about yields and inversions and how that's any kind of indicative. By the way, gang, that's just really terrible macro, or someone pretending that they understand macro. So here's NASDAQ, right? And if you're saying, Rog, what am I noting? Let's note a few things. When did it get above the 200? What was primarily the color of the grab candles? Okay. What was primarily the color of the lower row of the multi? Mostly green with small, couple swatches here of yellow, right? Definitely above the anchored VWAP. All right. So there's a lot of indications that this is overall bullish. All right. The next thing is that the idea that the 10-year, if the yields are going higher, is going to prevent the NASDAQ or any index from going higher as well. Okay, take a look at ZN. Now here for those of you that are not familiar with the 10-year or the long bond, anytime you pull up the ZN or ZB, it's the futures contract. When the futures contract is moving lower, right, that's actually indicative of higher yields. So when price is moving lower, that's higher yields. And pretty much all year long, below the 200, pretty much all year long, the opposite of the NASDAQ. Now remember, gang, there's a whole group of traders running around telling you that when yields in the 10-year are up, which is pretty much what it was until November, right, that the NASDAQ can't climb. There you go, 305, right in front of your face, price action versus price action, no narrative, no cutesy fake macro. That is why it would be fantastic for traders to look less at correlation, if not at all, and look at causation. What caused yields to go higher? What caused the NASDAQ to go higher? Two things that shouldn't exist in tandem, and yet they did almost all year long. So there you go. All right, Anita, I just joined. Any updates on SPY intraday trading? Do we need to focus on bull or bear? Well, if you just joined, Anita, just real quick, SPY doesn't open until 9:30, but NASDAQ and S&P right now are bearish. So if in the first 10 minutes we keep that bearish structure that we see on the S&P, which would, by the way, be the best way to understand what's happening on the SPY and the SPX. A lot of folks ask me, Rock, do you look at the SPX? No, I look at the ES. And then looking at a more complete view of the S&P, and then I look at the SPY and SPX, or even MES, the micro S&P. So those are things that I'll consider. Look at the ES futures, and then in the case of SPY, if the ES keeps that bearish structure, and it's 9:35, 9:40 Eastern, then we can open up the possibility to the SPY. And that's the way that I'll look at that. So thank you for the question. All right, next up, NOMO FOMO. Seems like perhaps there may be folks needing to still take profit, who didn't want to take gains in 2023, who are providing some of this short-term selling pressure. NOMO, I'll tell you what, I'll be honest, I don't know. That's a narrative, right? So I love starting off with a trade story, right? There's a hypothesis, and that's a sound hypothesis. Now I have to look at volume. I have to look at price action. So in terms of that being the case, could we still be seeing some selling pressure? Remember, Nomo, there is, yeah, exactly. Still trading the charts, trading what we see, not what we think, no doubt. As long as we take a narrative and say it can only be true of price and volume and volatility and time confirm, then we're always on a good track. So that being said, we know we're getting some sector rotation, mostly SMH and XLK. So we know those have been pulling back a little bit. Everyone was bearish on Friday, huh? And I guess they're bullish again now. Don't know. I try to leave the television on mute. But if I am looking at what's known as the January effect, so we have window dressing in December, we have window undressing in January. And if I'm looking at that January effect, that can either be one of two things. It can be sector rotation, meaning the strong sectors like XLK and SMH will roll over a little bit, while the lagging sectors of 2023, like XLE and XLV, can benefit. Now they don't have to move together. XLV is still getting a lot of benefit from sector rotation. When we do our weekly macro and position portfolio in the Sector Secrets Mastery later today, and I look at a 1-year look back, look, we've seen everything kind of move together, but XLV and XLF, while some of the other sectors like semis, tech, communications, and consumer discretionary pull back, XLF and XLV continue to move higher. That's a 1-year, 12-month look back. If I look at year to date, granted, it's only the 9th, but if I look at year to date, what has happened thus far in 2024? Look at XLV, look at XLF, look at XLC, even XLE coming up in 4th place. Look at the very bottom so far of the normalized performance of 2024. In your bottom 3 are semis and tech. So I would look at this as sector rotation, because the candidates for it, we were talking about what the candidates for sector rotation would be in the top tier outlook. My mastery folks, of course, you have access to that. And we specifically said, look, the top 2 were tech. Well, actually, were semi, then tech. And the bottom was energy and healthcare. And these are the heavily weighted sectors in the broader averages. These are not random sectors. These are those sectors that really, for the most part, make up what the S&P, NASDAQ, Dow, Russell is. So then ultimately, what we want to then do is say, all right, are we seeing flow into the laggards? Whoa, that makes my hand look huge. We're looking at flow into the laggards. And are we looking at profit taking, to your point, outflows out of the leaders? And we can measure that. In fact, this week in top tier, we're going to take a look at the first handful of trading days and the 5-day flows in these major sectors and see where is the money going, right? Money is attention, right? Where is the money going? Money is support. Money is momentum, right? Another way to manage, to measure money is volume. So we're going to take a look at that this week in top tier outlook and see, Nomo FOMO, to your point, is that actually something that I can watch with the data and then continue to see if the trend is accelerating or if it's waning and or reversing? Are we seeing flows back into the leaders or not? And we can measure all that. That's what's so great. As long as you know where to look, you can absolutely measure all that. So thank you for the question, Nomo FOMO. All right. Is that it on the questions? I do believe it is. Thank you, as always, gang, for joining me for Charts and Coffee. 3 years running, caffeinating and dominating. Thank you so much for making the show what it is. We'll be back tomorrow, same time, same station, 9 to 9:20 a.m. Eastern, Monday through Friday, right here at the Simpler Trading YouTube channel, as well as my YouTube channel at Raghee Horner. Be good to each other, gang. I'll talk with you soon.